The Bank of Canada is widely expected to hold its key interest rates steady on Wednesday as the Canadian economy bends to higher interest rates and inflation resumes its downward trend. The central bank held its key interest rate steady at 5% last month but kept the door open to more rate hikes, citing concerns about the persistence of underlying price pressures. RBC Assistant Chief Economist Nathan Jansen, an economist Claire Fan, in a client note on Friday said, economic data releases since the Bank of Canada opted to forego an interest rate hike in September have been mixed, but we expect that they on net have made a hike at next week's decision unlikely. The annual inflation rate rose in both July and August, while core measures of inflation, which strips out volatile prices, have not eased by much in recent months. But the September Consumer Price Index report helped quell some of those anxieties as the pace of price growth slowed across the economy and the annual inflation rate fell back to 3.8%. The Canadian economy shrank in the second quarter, and economists anticipate that weakness will continue for the rest of the year and into 2024. The Bank of Canada's recent Business Outlook survey supported this expectation. It showed business sentiment continued to weaken in the third quarter as companies said they expect sales growth to slow over the coming year. On the jobs front, employment continues to rise as Canada's population continues to surge, but the job market is not as robust as it was in 2022. Job vacancies have fallen and the employment rate has edged higher to 5.5%. Pace of consumer spending has also slowed. New retail Canadian retail sales fell 0.1% to $66.1 billion in August as the sale at new and used car dealers fell for the month, Statistics Canada said Friday. These trends are expected to continue as the effect of previous rate hikes take hold on the economy, pinching the pocketbooks of more Canadians and businesses. Last week, Bank of Canada Governor Steve McCallum said it was too early to tell what the economic repercussions of the Israel-Hamas war may be. The Bank of Canada's rate decision will be accompanied by its quarterly monetary policy report, which includes updated forecasts for global and domestic economies as well as for inflation. For the second time in as many months, Ontario Premier Doug Ford is calling on the Bank of Canada to pause any further interest rate increases, saying millions of Canadians are struggling to make ends meet. Ford said in a letter addressed to the Bank of Canada Governor and posted to X, formerly Twitter, on Sunday that there is simply no excuse for increasing the already crushing pressure previous interest rate hikes have placed on so many families and business. The Bank of Canada has increased its key interest rate 10 times since March 2022 in an effort to tighten up economic activity and bring down inflation to its 2% target.
Y Media.